Okay, we're recording this video. It is Sunday, 10th of January 2016, and the first week of trading is done, and it was a cracker. We had 11.8 million contracts traded, about 134 points to the downside. And the question is, where do we go from here? Are we going to see continued weakness? Is this going to turn into a correction, a crash? I'm going to show you what I'm seeing on my charts, try and take a view on that. But before getting onto that, just to talk about these last couple of bars here on this chart, and particularly this amateur up bar. Normally when we see amateur up bars kind of testing into highs, getting rejected like this, that's really important. I wasn't looking at this very closely because saying, this is holiday volume, this is, Christmas, this is New Year's, that I can't read all that much into it because it's just light trading during the holiday season. But turns out it was pretty important, it was pretty prescient as to what's going on. And when you look back over, the previous years, here's another amateur up bar at, Christmas time, New Year's, led to weakness. This one at the beginning of 2015, the end of 2014. Again, amateur up bars gets rejected, led to weakness. This one has got severe weakness after it, but I was kind of looking at my chart, kind of ignoring it, and I shouldn't have. 2100 turned out to be resistance on the weekly and the daily chart, and that's why we've kind of rolled around from it so hard, because we've got two time frames kind of syncing up. So I think this is pretty important on the way down. So when we talk about corrections and crashes, I always like pulling up my commitment of traders crash warning indicator signal just to see what's going on. The neat thing about this indicator is it's got corrections and crashes will be marked on your charts. Remember, a correction is a 10% move down off the highs. A crash is a 20% or more move off the highs. So we've had corrections in the last few years and one kind of crash back in 2011. So far, this weakness that we had last time around was a correction, and we are inches away from printing another correction on this. I think the number's about 1898 on this chart, which we could easily just touch on Monday, and that'll be a 10% move off these recent highs. I've got to tell you, I'm losing the love a little bit on my commitment of traders analysis. A couple of reasons why. The first one is this. When you get bars like this where the commitment of traders numbers are identical kind of week by week, and there's 5 in a row here, that's not a problem with the indicator, that's a problem with the data. So TradeStation, nice people that they are, decided to incorporate commitment of traders data in their data feed a few years ago, which was nice, made it easier than the old style was we'd bring it into an Excel spreadsheet, manipulate it, and then import it into an indicator, and that was kind of hard work. As soon as it was built into the data stream, it was great, but it's glitchy. There are times when the data is late and there are times when the data is wrong. I think what we've got going on here, this is just wrong data. I've tried refreshing my feed. If you've seen something different on your charts with TradeStation where the commitment of traders data is looking more correct than this, let me know. It's obviously something in my cache that's kind of stuck and won't get refreshed. But anyway, the second reason for kind of losing love a little bit, there's only so many things that you can look at on your charts, and as soon as you get kind of data overload, you start to get kind of analysis paralysis. Far better off looking at just a limited number of time frames and a limited numbers of indicators in order to make your decisions and just kind of keep it consistent. The more that you have, the more that you end up kind of just being stuck and not being able to make kind of decisions. Anyway, so it's not printed a correction yet, but I'm expecting that'll probably happen after Monday's trade, I'd have thought. And the reason why I think we're going to still see some moves on the downside is better sine wave. So here's better sine wave and a whole bunch of charts from the highest to the lowest, kind of going down these time frames. So weekly here, daily, then knocking it back in a 135-minute chart. There are 3 135-minute bars in a day. 81-minute chart, there are 5 81-minute bars in a day. Then 45, I think there are 9 45-minute bars in a day, and then 27-minute and so on. All an integer, a whole number of bars during the day, and you can kind of look back down through your time frames to see these end of trending signals being generated. Now during the week I put out a video saying that 1970 level was absolutely key. 1970, 1980 was supports on all of these charts, and as soon as that got broken, it turned into a really strong move on the downside. That's why a little bit of strength on Monday and Tuesday did not hold, We didn't have exhaustion sell on the downside. We were sitting precariously close to a whole bunch of support levels, and when the supports go, they degenerate into trending moves, and that's when we get kind of strong moves. Now, for these moves to end, we've got to see, completion. We've got to see a nice pullback to end of trend. So we've not seen that, and that'll start to ripple through. We'll see that on the lowest time frames first, and then rippling through on the highest time frames. So we've got a ways to go, particularly on the 81-minute and the 135-minute chart. We've got to see those pullback to end of trend moves. So that's what I expect to see on the lower time frame charts. Now on the higher time frame charts, what we're coming up to is cyclical supports, because you can see the red is above the blue, so that's the fast beta sine wave is above the slow beta sine wave, which means that we're due for some kind of support kind of coming in. On the weekly chart, we've still got a little bit of time to run before that kind of comes in, but we'll have trending moves on lower time frames syncing up with cyclical supports on higher time frames, and that'll be important. Now, one thing to note, when you see supports printing close together in two time frames where we're running on down on the daily chart, and at some point we'll print this support kind of going on here, and then on the next highest time frame, so like the weekly chart here, we've also got a support in due. What can happen normally is that the support will print on the daily chart, and then it'll get tested and we'll push through it, go lower when that support kind of comes in, and then overshoot this one on this daily chart, and then come up to the support on the weekly chart. So even though the daily chart's going to show printing a support level kind of coming in at some point in the next, well, whenever we get some strength, have a strong bar, that will likely get tested again and pushed down through until we kind of come up with support on the weekly chart. So timing wise, what that means is we've still got quite a few days of weakness on the downside before those things kind of play out. Now everything's kind of backwards and forwards, nothing moves in a straight line. We're going to be backwards and forwards on certain days, but I think the overall trend is still on the way down because we've not seen end of trends, and we've got these cyclical supports to kind of play out, and the weekly one's the really important one to kind of come in here. So that's on the E-mini. You can see exactly the same things kind of going on the indices. So on the daily charts here, you can see this is the Dow, the Nasdaq, we've got the Russell and the S&P 500, and all of these have got these same patterns, red above blue, so the fast above the slow line. At some point we'll have cyclical support kind of come in here on these time frames. We got blue professional down bars, we've got only one exhaustion sell kind of going on here. We've got to find exhaustion sell on the other time frames kind of going on, so there'll be more downside volume kind of going on. So that's on those charts, on the daily charts, exactly the same patterns on these different indices as the E-mini. On the weekly charts, again the same deal. We've got resistance to support to play out here. This is on the Dow chart. Still got some time to run there on the downside, and we've got to see exhaustion sell kind of going on. Decent readings kind of on the way down here, but it's got to mirror something like a 12,000 read, so we've got still some weakness kind of to happen here. The Nasdaq, again, still got some time to run, resistance to support on beta sine wave, and we've got a 15, 16 reading kind of going on here, but it's probably got to be bigger than that. We've got to have a decent read. What was this one? Yeah, this one was 22, so there's still kind of downside selling volume to go on there on the Nasdaq. The Russell has been the weakest of all of these indices, and again, resistance to support. This one's got far more time to kind of play down. It's like in terms of the cross happening here. We've only just put in our resistance kind of going on there on the Russell, and then the S&P 500, same deal. We've got a 21.6 reading here, but these exhaustion type readings were, this one was 27. So yeah, we've still got downside and blue professional bars to come in as well. So I still think we've got kind of that exhaustion selling, that capitulation volume to kind of come in on all of those things. So what else can I show you? You can put the indicators on a daily, weekly and monthly chart. It's kind of interesting that we're playing down into cyclical support on this monthly chart. I don't know, that would suggest that we're talking about several months of weakness here on the E-mini, but let's just wait and see. I mean, I'm day trading, taking 4 to 5 points in a move. It's like I'm not going to kind of look at a monthly chart and say I should be short for the next 3 or 4 months. That's not my style at all, but it's interesting that that's kind of playing down to some kind of level here. 45-minute chart. Just let me show you this on, this is the multiple time kind of frame view of things. When you have a 45-minute chart, because you don't have the overnight session, it tends to be jerky, you know, a lot of kind of gapping up, gapping down type stuff. But we are showing weakness here. This is actually all of this week's activity. This is Monday, Tuesday, a little bit of strengthening to an exhaustion buy pattern. That was actually what I call a last roll of the dice exhaustion buy. We had not seen exhaustion sell on the downside. This exhaustion selling was getting the move going. We have not seen exhaustion sell on the downside here, and we're through all of these supports, so we've still got to make more kind of pullback to end of trends on these time frames, the 45, the 135 chart and so on. And just to show you this on better momentum, so there we go. The reading we've got here is 101,000. Yeah, it's kind of getting close to this reading, which was 119 or something, but I think we're going to see a decent read on the way down. So blue professional down bars, which is good in terms of activity at lows, but we've got to see that exhaustion sell and then the pullback to end of trend moves. So that's what I'm looking at on my charts. I think we'll easily print that correction during Monday's activity, 10% move down, and let's see where it goes from there. It could get interesting on the downside. So yeah, it should be a good week. Hope your trading is going well, and looking forward to Monday.